Hello, good evening. Welcome to Property Zone Live again. This is Sean here. And the topic today is none other than Silicon Valley Bank, SVB. Okay, the collapse of SVB has taken a storm and shocked the whole world market. So today, I want to share a bit with you is how it happened and how it's going to affect the investor, whether you are a stock investor, and in this case, in particularly, if you are a property investor, I don't think you want to miss the session. Okay, so I have actually done up some slide and I want to share with all of you. So just let me click the button and bring the slide up very quickly. Okay. So this is the first slide of the day. Silicon Valley Bank's collapse. Fear of financial crisis after bank used by US tech sector fails. Okay, this is basically the logo of Silicon Valley Bank. And I think few important things we need to know about SVB first. Okay, market in general are comparing this to Lehman Brothers bankruptcy during the subprime crisis back in 2008. Okay, at the times, even AIG, Citibank is on the verge of facing bankruptcy. If not because of the intervention of the US government using the taxpayer money, we probably wouldn't have AIG, Citibank, and many other big corporations. So this memory 15 years ago still live vividly in a lot of investor mind. So this is something that actually draw a parable comparison. Is the biggest question in people's mind is it going to be another subprime? Is it going to be another Lehman Brothers that affect the whole world, and to what extent? So basically, Silicon Valley Bank, okay, SVB, is a 16th biggest bank in US. Okay, in Malaysia, we have more than 10 banks. But looking at the size of US, whether it's the population and in terms of the market and all, we will know that even the 16th biggest bank is probably biggest than Hong Leong Bank or even CIMB Bank per se. In that's a matter for comparison. Okay, the deposit they have in US dollar is amounted to about USD 190 billions. Yes, not million, but billions. A lot of people, it's actually the first time they heard of Silicon Valley Bank because of the recent news. But this is not a new startup. Okay, the bank has actually established back in 1984. Today's is going to mark almost their 40 years of anniversary. Okay, why they call themselves a Silicon Valley Bank is because they are the preferred partners, okay, for a lot of Silicon Valley technology companies and the startups. If you remember not too long ago, during the COVID time, technology company was having a boom time. For example, Zoom, for example, Facebook, Meta, and all. Okay, a lot of liquidity and investment are coming to these technology companies. So they have actually put the deposit with Silicon Valley Bank. And some companies even put their payroll system. Okay, they use Silicon Valley Bank payroll system to pay their employees and so on and so forth. But one thing to take note of, unlike subprime crisis time, okay, whereby a lot of banks are lending out their money to a lot of unqualified borrowers. So in the events when those unqualified borrowers cannot pay back, it creates the crisis. But this time, it's a totally different story. SVB is not an irresponsible bank to lend out indiscriminately. Okay, so what happened really happened, I will share with you later. Okay, this is some of the things, as I mentioned, no, will the 2008 financial crisis repeat? Here is a very, very important snapshot of what Silicon Valley Banks is about. Okay, so after the bank closure, nearly of the 175 billions of customer deposit are now under the control of FDIC, Federal Deposit Insurance Corporation. Of course, if you put in Malaysian context, FDIC is like a PIDM. So example, you put in the bank, okay, for 250,000, this amount of money will be insured and it will secure even the banks run, even the banks collapse. But the question lies, What about the remaining balance? So out of the 190, only about 15 billions are actually under FDIC POS list. But eventually FDIC stepped in. They actually mentioned that if you are a depositor in the Silicon Valley Bank, you will get back every single cent of it as and when you need it. Okay. So eventually after the closure, the FDIC has created a new bank called a National Bank of Santa Clara, actually another city in Silicon Valley, which will hold all the assets of Silicon Valley banks. Okay, now, so subprime crisis is another thing in mind, but at the moment, what is transpired a lot of investor mind is it an isolated case together with signature banks, or is it more to come? Would there be a domino effects in the banking system? So at one point, people think that it's just one of the bank, and it's not the one of the top 10, it's the 16th biggest bank. But you have to know that banking system in any country of the world, they are highly interconnected, not because of the dealing I have, and at the same time, it's also because of the mindset and psychological confidence they have in the bank system. So SVB was a 16th biggest bank, and they are actually the second biggest bank to collapse since 2008. Even though they brand themselves as Silicon Valley Bank, they actually have branches and operations all over the world, including Europe, Israel, and China. Actually, a lot of funds are stuck in SVB, where the technology company are supposed to transfer the fund to China. Okay, but they are stuck for the moment. Okay, potential domino effects I mentioned is like many other banks might be in the same situation as SVB. So we just want to see is there any other banks will cry for help, ask for help in the event of distress situation like this. The good news is the FDIC, which is the Malaysia BDIM per se, would actually took the shift action. He come and make an announcement on Sunday before the business operating starts on Monday. So he make a very important and very clear announcement. Depositor will have access to all, the important word is all of their money starting Monday, March 13. No losses associated with the resolution of Silicon Valley will be borne by the taxpayer. Okay. So if you are a property investor listening to my is listening now, okay, I think there could be a silver lining to the collapse of the SVB. Why and how? Now, number one, it may force the Federal Reserve took a pause from its aggressive rate hike. As you know, we have a roller coaster ride in terms of the rate hike and rate drop throughout the past 18 months. In the year of 2000, last year, 2022, it have increased more than 8 times. A lot of business are actually suffering, investors are actually suffering, but because of inflation, coupled with very hot job markets, they are seeing no ends to this aggressive rate hike, and it's actually impacting a lot of property investors as well. Okay, these incidents may actually prompt the Federal Reserve, which is central bank of the US, to actually taking a pause from its rate hike. So Nomura Bank, one of the prominent bank, actually even predicted, right, from the expected another 50 basis point or 0.5% increment on the table for the next FOMC meeting, that actually now predicted to be a rate cut. Goldman Sachs and Barclays Bank is actually predicting a 0 increment in the next meeting. So this event actually changed a lot of expectation from 0.5 rate hike to 0 or even a rate drop of 0.25%. So you can see certain major indexes in the US market is actually welcome the news. But at the same time, Asian market are actually still trying to digest the banking failure. Now, the other things to take note of is actually oil prices, which is one of the major components affecting the cost of living for almost single and every one of us. Oil prices has dipped below USD $80 per barrel, and hopefully this will actually bring down inflation more. Therefore, these are the events of the sequence of events that actually may force the Federal Reserve to take a pause from its aggressive rate hike. Okay, this is what Nomura Bank has actually come out. Federal Reserve could cut rates next week as sell-off suggests more support needed. Goldman Sachs actually say that they are no longer expect the Fed to raise the rate this month. Okay, and in the event of this response, futures of the US market index actually surge. Okay, coming back again, the biggest bank to collapse since the subprime, and it not doesn't shock the Silicon Valley but the whole world as well. Now, how it happened? How it happens basically two things: escalating withdrawal from depositors due to cash flow needs, and the loss the SVB suffer due to selling long-term bills. I know it's a bit technical, but just think of yourself in SVB shoes. Now you have depositor coming in. A lot of times, back in 2021, 2022, 20, not 2023, but 2021, 2022, because of the pandemic, they actually have ample of market liquidity, especially with the tech company. So this company will actually deposit the unused fund with Silicon Valley Bank, SVB. So, but as you can see, the latest news for the past few months or even the year, tech company are not doing that well. The environment of doing a business is getting tougher and tougher. You are seeing a lot of layoff from tech companies. This is actually show that the cash flow is actually impacting from the harsh business environment. So at the same time, they are laying off. In order to replenish cash flow, they are actually doing a withdrawal from the bank. Not just one, but tons and tens, maybe a dozens of the companies are taking a withdrawal from the SVB. So this is one part. Now, SVB are not lending out a lot of money at that times. What they did during that times, they actually bought into government bonds, especially the long-term government bonds. During that times, the yield for the bond is not very high. It's actually quite low. If you remember, before the rate hike, the interest rate was low. Therefore, the yield for the long-term bond is low. But because interest rates they're giving to the depositor is low also, so it's okay. But when the rate keep on increasing, for example, if they bought a 10 years bond paying 0.25%, and at the moment, the short-term new issue government securities able to give 2.5 or even 3%, then whatever securities that SVB bought 1-2 years ago actually suffer paper loss. Of course, government bond is secure if you hold until maturity. But now SVB did not have the luxury of time to hold until maturity, because when there's a request to withdraw, they have to sell the asset they have, which is the long-term government bonds that are actually suffering paper loss at the moment. They are selling at the loss, and eventually whatever they sell is not enough to cater the needs for the withdrawal. That's what happened. So the collapse of SVB happened mainly because of this factor. Huge withdrawal. In order to cater for the withdrawal, they need to sell their assets, which is the government bond, at the loss. Okay, this actually triggered the events. Okay, now because of that, the Federal Reserve, which is the central bank of the US, may have to take everything back to the drawing board and do a recess. Do we continue to increase the rate, knowing the fact that yes, maybe the inflation is still not coming down as much as they want, job market was still good, but at the same time, if you keep doing this, we may be seeing more and more banks facing crisis like this. Not just tech company, not just general business, but also the banking system. So the good news, we can see until the latest development is the assurance of the FDIC, the assurance of the US government to make sure that if you actually put the money in the US banking system, okay, even you have put into SVB, which is the center of all the crisis, be assured your money is secure. I think this actually boosts a very great confidence, and a lot of investors are having a better confidence in the banking system. And you know what? One major important guys that if you remember the movie called Big Shots, right? Inside there, there's actually a real guy called Michael Berry. He is the one who successfully predicted the fall and the happening of the subprime crisis back in 2008. And in fact, at the time, he short a lot of CDS, collateral debt securities, anticipating that the market would drop. So this guy has a lot of credential. He can actually see a lot of things before anyone can see it. But he made an announcement in his tweet. He said that he see no true dangers from the SVB crisis. So it's a very important thing, and from a very influential guy, even back in subprime crisis. Cool. So let's come back to the sharing today is basically SVB, First Signature Bank, the collapse has shocked the whole world. Okay, but if you are a property investor guy, I don't think you should be panicked. I think first of all, we are far away. We are not depositing. I don't think most of us do not have any deposit in SVB, also in the US banking system. But I think what would actually impacted us more would be what is the next course of action of Federal Reserve. So hopefully, from an investor point of view, rate hike, aggressive rate hike is very bad for us. So we are hoping that Federal Reserve will take a softer approach, either pause the rate hike or potentially a rate cut as predicted by Nomura Bank. So with this is the end of my sharing. I hope everyone enjoyed it. Thank you very much. Bye-bye.